Enphase Energy stock has had a rough ride. It's down 57% this year and nearly 90% below its all-time high. To determine whether this might be a good buying opportunity, I'll go through the company's fundamentals and run a DCF model to estimate the intrinsic value and potential future returns. Enphase experienced outstanding growth up until 2022, with revenue increasing from $357 million to $2.3 billion in just a few years. However, since then, revenue has fallen to around $1.4 billion. There are two main reasons for this decline. Number one is that higher interest rates have made residential solar financing more expensive, slowing demand both in the US and Europe. Reason number two is the NEM 3.0 in California. California changed its solar rules in 2023. Now, homes get paid much less for extra power they send to the grid, especially in the daytime. That makes solar-only systems less attractive, so fewer get installed. With fewer installs, Enphase sells fewer microinverters, so revenue falls. In my view, these challenges are temporary rather than structural. Supporting this view, Enphase's quarterly revenue has shown solid growth over the last 3 quarters, indicating a possible recovery. Analysts also expect moderate growth ahead, with revenue projected to rise from $1.5 billion in 2025 to $1.74 billion by 2029. Enphase's profitability follows a similar trend. Net income peaked in 2023 at $438 million, but has since declined to around $174 million. One encouraging sign is that the company has strong free cash flow, which currently stands at $373 million. Analysts expect EPS, or earnings per share, to grow from $2.70 this year to $3.91 in 2029. If we apply a P ratio of 20, this would imply a future stock price of roughly $78 per share, representing upside potential of around 103% from current levels. Moreover, Enphase has great margins, as gross margin is currently 32% and free cash flow margin 25%. Now, in order to calculate the intrinsic value of the company, I use my discounted cash flow model. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions, and the intrinsic value according to my low assumptions is $25 per share, middle $42, and high $68. And because the stock is currently trading at $37 per share, this would mean that if my low assumptions occur, you would get a 3% annual return on your money in the next 7 years, middle 12.5%, and high 21.5%. As far as my assumptions, I assume Enphase grows revenue between 3 and 9% in the next 7 years, the average of profit margin and free cash flow margin of 15, 20, and 25%, and I assign the PM price to free cash flow at the end of the 7 years of 16, 18, and 20. But if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. Now at current levels, Enphase trades at a forward PE ratio of 15 and price to free cash flow of 12. Both of these appear reasonable valuations for a company with strong fundamentals and significant long-term potential. The balance sheet is another positive. Enphase holds $1.5 billion in cash against $1.23 billion in debt, giving a net cash position and financial flexibility to weather short-term challenges and invest in future growth. In my view, Enphase is a buy at current levels. Solar energy is undoubtedly a key component of the global energy transition, and Enphase, as a leading supplier of microinverters, is well positioned to benefit from that long-term shift. The solar energy market is projected to grow at around 12% annually between 2025 and 2034, and with Enphase's current market cap of roughly $5 billion, there is still substantial room for expansion as demand for clean energy solutions accelerates. While near-term headwinds remain, Enphase's strong margins, solid cash flow, reasonable valuation, and healthy balance sheet make it an attractive long-term investment opportunity in the renewable energy space. Lastly, if you want a discount on stockanalysis.com, the best site I found for stock data, grab my code in the description. I hope you found this video valuable. Let me know what you think about Enphase stock in the comments, and I'll see you in the next one.